Powell tells NPR economy has long road ahead of the jobs gain. Federal Reserve Chairman Jerome Powell said that while U.S. unemployment data for August was positive, the economy's recovery from the coronavirus pandemic has a long road ahead, and interest rates will remain low for a long time. The recovery is continuing. We do think it will get harder from here, Powell told National Public Radio in an interview Friday. Today's jobs report was a good one, he said, adding that to get us back to full employment, we are going to have to get the disease under control. Fed Chairman Powell holds video news conference following FOMC rate decision. There may be a modest slowing in the pace of improvement, but improvement goes on, and in the labor market, I would say it goes on at least at the pace we expected. Powell spoke hours after a report showed the United States labor market extended its rebound for a fourth month in August, with the unemployment rate falling by almost 2 percentage points to 8.4%. The much better than expected improvement in the jobless rate spanned demographic groups, while the payroll gains of 1.37 million were broad-based across industries. Other recent economic data have been mixed. While a measure of manufacturing expanded in August at its fastest pace since late 2018, consumer spending, the heart of the US economy, decelerated in July. Powell suggested that more support for the unemployed and small businesses may be necessary to help Americans hard hit by the coronavirus crisis. Lawmakers remain deadlocked on another aid package, with Democrats pushing for a much bigger program than Republicans and the White House are willing to agree to. New framework. The Fed last week unveiled a new long-term strategy for conducting monetary policy, under which it will seek an average 2% inflation rate over time and broad-based and inclusive gains in the jobs market. The new framework, which was 1.5 years in the making, was seen as reinforcing the Fed's ultra-expansionary monetary policy. A series of policymakers this week suggested that they were in a no rush to build on the framework by providing more specific details on their interest rate plans, so-called forward guidance. While saying he did not want to comment on the level of the stock market, Powell pushed back against suggestions that the Fed's super lax monetary policy was leading to a bubble in equity prices. The connection between low interest rates and financial instability generally is not as tight as many people would think, he said. Nothing that interest rates are low worldwide, Powell said. There is no reason why that would lead to, excessive asset prices, for example, in stocks.
Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.